안녕하세요, 여러분. 좋은아침입니다. Who doesn't know about South Korea? We believe that most of the students here know about South Korea. Samsung, LG, and other brands, we think these are something familiar to our daily life.
South Korea is dominating the world in many aspects, but how about their economic state? Is South Korea one a strong value currency? In this opportunity, I'm Zeshaline Iriene along with Severin Ferren, Naafi Diva, and Stephen Gideon from Group 1 will present our analysis about South Korean won.
South Korea, a country in East Asia, occupies the southern portion of Korean peninsula and the capital is Seoul. All banks in Korea were nationalized in the early 60s and it has been announced that the official currency is won. The South Korean economy has grown remarkably since the early 60s due to strong government support, export-oriented industry, and highly skilled labor. South Korea transformed itself from a poor agrarian society to one of the world's most highly industrialized nations. For further explanation, you can see it on the slide.
Next, let's dive deeper to the history of South Korea. Before the founding of the Republic of Korea, for nearly 4 millennia, several dynasties have ruled in Korea as written in the slide. Long story short, the history of South Korea formally begins with the Japanese surrender on 15 August 1945, and eventually the country split into two regions, namely South Korea and North Korea on 8 September 1945. In December 1948, the General Assembly of the United Nations recognized the Republic of Korea as the sole legal government of Korea, and South Korea has seen substantial development in education, economy, and culture since then. Next.
After learning about the state history, let's also learn about the history of South Korea one that starts from 3 before century, when the first coin in the form of Grand Coin, as also known Myeongdojun, belonging to the state of Yan and Gojoseon. And then, due to the Japanese invasion, South Korea currency had changed so many times, such as Yang in 1892, Yen in 1910, and so on and so forth. The won was reintroduced to the South Korea currency on June 10, 1962. Nowadays, the Bank of Korea responsible for the coins and the banknotes. Shown on the screen are the bills in circulation. Next.
In this slide, we are going to explain about the graph that shows the currency of movement from 2017 until 2021, and we use indirect quotations of the country's currency toward the US dollars. As you can see, there are 5 trends that we are going to explain that consist of 2 bullish conditions and 3 bearish conditions. Okay, so the black arrow shows the long trend. The currency has been stagnant from 2017 until 2021, with 0.008 USD per 1 South Korean won. It reached its peak in April 2018 with 0.00094 USD per 1 South Korean won, and its lowest in March 2020 with 0.00074 USD per 1 South Korean won.
In the year of 2017, South Korea experienced a bullish economic condition, and one of the main factors that affect the fluctuation is export demand. As we know on the slide, the weakest value of this currency is this much, and the highest value of this currency is this much. South Korea GDP growth from the 2017 was 3.16% and 0.21%, increase from 2016. It is improving global demands for South Korea goods supporting growth in the second half of 2017. Next.
The first factor is export demand. Since the establishment of POSCO in 1968, the Korean steel industry is considered to be one of the leading industries in the world. In 2017, the amount of export rose to 72% or 11.3 million metric tons. It reformed its production and produced some flat products of steel so that they can be unique and exported more from their country. Why do exports affect currencies? When a country exports more than it imports, there is a high demand for a good, and therefore its currencies. The economic of supply and demand show that when demand is high, prices and currencies rise.
Second is trade barriers. There are changes in U.S. policies. Former U.S. President Donald Trump signed his approval for safeguards on washing machine imports from Korea, Samsung Electronics, and LG Electronics. The safeguards included a 50% tariff on a quota of washing machines. Imports over 1.2 million units led to price hikes of the Korean product in the US, and it strengthened the currency too. And lastly, productivity. The government of Korea was taking an active part in implementing the new policies. The policies are easily adopted by the industries, so they are working efficiently, effectively, and with the best result as well. South Korea's electronic industry ranked third in terms of production. The Korean electronic industry recorded 120 billion US dollars, growing 10.3% from the previous year. Because they are more productive, the output that they are able to export varies in large amount, and it increases and strengthens the demand of their currency. Next.
In this year, the South Korea economy grew 2.7%, the slower pace of economic growth in the past 6 years. In 2018, South Korea experienced a bearish moment and the trade barriers gave the most impact. The highest peak and the lowest value of this currency are shown on the slide. Next.
Shown on the slide are the main drivers of South Korean won demand. The first factor is trade barriers. In 2018, the Trump administration's stiff tariffs on some export from major trading partners could trigger a collision with other countries, especially China, South Korea's biggest trading partners. Korea extended the 25% US tariffs on trucks. Due to this, it lowered the demand for China's supply of Chinese yuan, and it lowered the demand and the value of South Korean won.
The second factor is import demand. According to official data, South Korean imports total $500 billion in 2018, 11.8% more than in 2017. South Korea was the world's seventh largest steel importer in 2018. When import demand rose, the exchange rate depreciated in the long run because it meant that the demand of South Korea won decreased and the supply increased, which weakened the currency.
The third factor, the export demand. Export declined 2.2% on quarter and remained the biggest risk for South Korea's trade-reliant economy 2018. In 2018, the import market share for South Korea's steel products decreased in 6 of South Korea's top export destinations. The share of China's import from South Korea decreased the most.
The last factor is productivity. Data from the central banks of South Korea showed that their shipment of chips and electronic products were falling. If the shipment is full, the more inventory will increase the supplies. But the lesser the demands, the lesser the sale. So it will decrease the value of the currency. Next.
Next is South Korean won fluctuation in 2018. In 2019, it was the lowest growth rate for South Korea. It was only 2.04%, a 0.87% decline from 2018. For the whole 2019, the economy grew by 2%. South Korea experienced a bearish moment, and the main reason is productivity. The highest and the lowest value in 2019 are shown on the slide. Next.
These are the factors that affected currency demand. The first factor is trade barrier. The US Department of Commerce decided to impose an anti-dumping duty of 39% on an iron pipeline for oil delivery in July, and the Seoul government took countermeasures by imposing import duties of 350 million US dollars. So the price increased, which lowered the demand of the products and the value of the currency because less people wanted to buy the product.
Second, import demand. In 2019, South Korea was the sixth largest destination for US agricultural exports, which totaled 7.5 billion US dollars. South Korea imports soybeans, rice, feed, and fodders grew by 69 million US dollars and 46 million US dollars respectively. The more they import, the less the demand of the country's currency, which lowered the South Korean won's values. Next.
Third, export demands. Export demands 0.1% in a volume terms, reflecting the extended slump in shipments, which declined for the 13th consecutive month through December. The value of South Korea 2019 export decreased 7% from 30.3 billion US dollars to 12.4 billion dollars in 2018.
Last but not least, productivity. Japan and South Korea are a part of tightly linked network of economies that contribute to the production of electronic goods. But in early July, the Japanese Ministry of Economy, Trade Industry announced that they will terminate special treatment in the licensing of specific chemical products for export to South Korea. It had an impact on South Korea semiconductors and electronic industries, which rely heavily on imports from Japan, causing a serious supply shortage in the global semiconductors market. And it also lowered the productivity of the market too. Higher labor productivity tends to lead to appreciation of the rate. Vice versa, lower labor productivity tends to lead to depreciation of the rate. Next.
Next is the South Korean won fluctuation in 2020. The GDP growth was low due to the pandemic era. It was $1.6 billion, a 0.98% decline from 2019. However, the value of the currency increased. In 2020, South Korea experienced a bullish trend with at the lowest and at the highest value shown in this slide. The main factor that affected this year the most is export demand.
These are the factors that affected the fluctuation demands. 1. Trade barriers. As the Trump administration made a plan to increase tariff on European-made vehicles and continue the unusual trade negotiation with China, a safe place for automakers to import vehicles to the US tariff-free is South Korea. That accord was recognized for improving vehicle import to the country, which increased the demand of vehicle production in South Korea and also its value.
The second factor, import demand. Overall, South Korea's import demand in the year 2020 decreases. For example, import of crude oil in South Korea decreased in 2020. South Korea imports from United States of mineral fuels, oils, distillation products was 11.87 billion US dollars during 2020. According to the United Nations Comtrade database on international trade, this condition led the money to increase its value.
The third factor is export demand. South Korea's export expanded at their fastest pace in 26 months in December 2020 on robust shift demand and improved global demand. Export grew 12.6%, the sharpest growth since October 2018. The Trade Ministry said semiconductors export were exceptionally strong, with 11 of 15 major export items posting growth. Sale of IT products boosted and the overall growth. When a country exports more, there is a high demand for its goods and therefore its currency. The economic supply and demand show that when the demand is high, prices and currencies rise.
And the last factor is productivity. In 2020, labor productivity per hours for workers in South Korea was estimated at around 41.7 US dollars. The labor productivity in South Korea has increased 2.96% over the last 2 years. It was 40.5 US dollars in 2019. Other data that proves the increase of productivity is vehicles that are forecasted to account for about 5.5% of US vehicle sales according to LMC Automotive. Higher labor productivity tends to lead to appreciation of the real exchange rate. Next.
Fluctuation 2021. In 2021, South Korea experienced a bearish trend with the peak and the lowest are shown on the slide. The main factor that affected the demand is the productivity, but the Bank of Korea showed GDP expanded 4% in 2021 as demand for exports soared. The highest and lowest value of the currency are shown on the slide. Next.
These are the factors that influence South Korea currency. The first factor is productivity. From July 9, South Korea for the first time tightened the COVID-19 regulation to the strictest levels as possible in Seoul and neighboring regions. Under the new restriction, the industrial activity are struggling to go back to their regular productivity. The effect was it weakened the value of the won. South Korea factory output shrank for a second straight month, signaling the Asia's fourth largest economy was struggling to fully regain momentum. With lower domestic productivity, the exchange rate would depreciate, so the expected return on domestic assets fell.
Last but not least is import demand. Imports rose 31.5% up to 615 billion US dollars in 2021. It is the first time for annual imports to reach the $600 billion milestone. The effect was when the import demand rose, the exchange rate depreciated in the long run.
This brings us to the end of our presentation. To summarize our main points, over the past 5 years, the South Korean economy has followed a similar track to other countries. Despite all the growth and the efforts, South Korea is still one of the weakest currencies in the world. If you would like more information, here is a list of useful resources. That brings us to the end. We would like to thank you for your time and attention today. Thank you.